Danny Lau here with Lion Real Estate, empowering individuals and families with financial success through real estate. How can you take advantage of the real estate market in 2021? I believe there is a smart financial move to be made in every scenario. So let's take a look. Let's break it down. Let's look at different scenarios. The first scenario, let's say you own a second home or investment property. Right now, it is one of the best time to sell. If you're thinking about liquidating your second home in the next 5 years, in that timeline, I would highly consider selling it right now. In my mind, there's no doubt that it is one of the best times to liquidate, to get top dollar for your investment property. Once again, I'm focusing specifically talking about investment properties or second homes. When you liquidate, when you put that property on the market, buyers are going to trip over themselves to compete to get into your property. If you have been paying attention to the real estate market, this is probably not news to you. Now, there's a reason why I am talking specifically about second home properties. Because now, from second home, I'm going to talk about primary homeowners. As a primary homeowner, the biggest hurdle is if you sell, sure, your listing is going to make a killing on the market. But if you sell, where are you going to go? So now, that gives us a couple of things to talk about. The biggest thing is there is a want and there's a need. If you need to sell your home, a divorce situation, you just found out that you're pregnant with twins, and now your space is not big enough to accommodate. You need a bigger space. In that case, so be it. You have to bite the bullet so that you can expand and find that dream home for you and your family. So if you need to sell in order to buy, that's timing of the market is irrelevant. Now, if you want to sell, if you just say, I don't really like this house too much. My dream home is in a different neighborhood and a different layout. You don't have a need to go anywhere. To me, if you are making a killing on your sale and you're selling high, but on the other side, when you buy a replacement property, you're also buying high. So it's kind of a wash. And on top of that, you are going to lose money in friction costs. Friction costs such as commission, loan origination fees, title and escrow fees, you name it. And so it is really not necessary for you to go through that hassle. As a homeowner, I do think there are smart moves you can make right now in order to take advantage. And if your interest rate on your mortgage is over 3.5%, I would highly consider refinancing. According to Freddie Mac, as of January of 2021, there are over 5 million households in the United States that have mortgage with an interest rate over 4%. The interest rate right now, even though it fluctuates, as I'm filming this video, is hovering right under 3%. For these 5 million households, I have no doubt that they will save thousands of dollars if they go through a refinance. And so keep in mind that I'm not a mortgage lender, and you will want to touch base with your local bank or your local mortgage lender to just have that conversation and see whether you qualify for a lower mortgage and can save a couple $100s a month, adding up to thousands of dollars every single year. Now, you may even argue and say, you don't want to have any out-of-pocket costs. The good thing is, a lot of times refinance, you actually don't have to put money pull money out of pocket to pay for the refinance directly, because the housing market is so hot. Equity is an all-time high. And so a lot of times, let's say the refinance is going to cost you $3,000, and I'm just pulling a number out of a hat, depending on the size of your mortgage and a whole host of other factors. It can really, have a big range there. But let's say it's $3,000 to do a refinance. Now, you as a homeowner, a lot of times can cover that cost out of your equity. And in other words, when you do the refinance, you don't have any out-of-pocket cost for the refinance. That additional $3,000 just got added on to your principal. And even your principal got a little bigger by $3,000, most of the time people are still coming out ahead because of the historically low interest rates. So we talked about second homeowners, primary homeowners. What about soon to be homeowners? So now, if you are thinking about making a purchase and you're really discouraged by the current real estate market, totally understand. Earlier, I mentioned there is intelligent financial moves to be made in every single scenario. And sometimes the intelligent thing to do is not to do anything at all. I would highly consider sitting this one out. So once again, let's talk about this. There is a need and a want, even as a primary home, soon to be primary home homeowner. The need is, you have to buy the house. Well, if you have to buy the house, this is a moot point. You just have to buy it. But if you want to buy the house, you don't have a pressure to go anywhere. You may be in a long-term lease that is not going to skyrocket in terms of monthly rental cost, and you don't have that pressure to go out and look for your home. Maybe you're living with your family, and once again, you don't have that pressure to go look for a primary home. In that case, I would wait. Nobody can tell whether a buyer's market is coming. Nobody can know where the real estate market is going to go down the road. However, I do believe the market supply is going to catch up better to demand. And so as a buyer, you will be able to see more inventory down the road. And so whether that is 2 years or 5 years from now, as long as you don't have that pressure, right now, I would hold out. Now, that being said, holding out doesn't mean that you're not going to do anything with real estate. I would highly consider putting your money to work in a REIT. And so basically, instead of owning real estate outright, you can own real estate through an investment vehicle. And through these REITs, you can now purchase real estate and take advantage of the rising real estate market in this sense. Now, keep in mind, once again, I'm not a financial advisor, so this is not financial advice. However, you can think of a REIT as a long-term investment vehicle where instead of putting your money in a savings account and earn next to no interest, you can put it towards a REIT and earn 3 to 5%. And so when you're ready to buy, 3 years later, 5 years later, now your down payment has grown in size and you become a more powerful buyer in the marketplace. Second homeowners, sell now. Primary homeowners, refinance. Soon to be homeowners, hold out, but look into putting your money to work in real estate while you wait for the perfect opportunity to buy as a homeowner. If you enjoyed my video, please click like and subscribe and leave in the comments below what you want to talk about next time. My name is Danny Lau, and I'll see you next time.